All right, if you have ever thought you'll never be able to afford a house, this video is for you because we're gonna talk about a brand new 100% financing program new in Hawaii. And if this is your first time watching my channel, my name's Marina Tolentino. I'm a real estate agent here in Hawaii, and this channel is all about buying, selling, all the things real estate and making good financial decisions for your family. So let's dive in. I'm joined today with Jessica, who is my dear friend. We've known each other for probably like 4 or 5 years through the world of entrepreneurship. So she used to have a company called Plant Sacks, which is a really cool, plant cover, basically, right? It's a hand-sewn basket for your plant. Really cute fabric. She would incorporate with local businesses, which we loved, and they're very fashionable. And then I have Tolentino Honey, so we knew each other through that world. But now she's a wonderful lender, and so as I became a realtor, we connected instantly, knowing that we wanted to bring really neat things to you guys and just share as things come out on the world, because new programs come out all the time. It's never a one-way or one-size-fits-all loan situation, and so we're gonna kind of dive into what this program is. Like I said, it's brand new to the state of Hawaii, about 2 or 3 weeks ago, maybe max. But basically what happened is she reached out to me via email and she's like, hey Marina, there's this cool new thing that just came out. I made a TikTok about it, and I'll just share with you guys. So this has 17,600 views on TikTok, 181 shares, 1,147 likes, 76 comments on it, and 288 saves. And I just gave like a really brief overview of like, here's this program, you don't need down payment, like let's go. And then everybody kind of reacted in a great way. We got great feedback. We did an initial webinar on Zoom and it failed to save to my computer. So this is official, take two. Yeah, take two. And we'll just do another really good review for you and then some action steps for you at the end. So with that, Miss Jessica, please tell us your ways.
Thank you. Yeah, so I'm Jessica Heiman. I'm with Academy Mortgage, based here in Honolulu and licensed in the state of Hawaii and also California. So happy to help with your lending questions, needs, everything within those 2 states. So this program that came on was really exciting. Again, like she said, it came out just about 2 weeks ago, and Academy Mortgage was the only company that was offered it, which is great. So it is a pilot program, and it's offered through the FHA loans. So a lot of people have heard of FHA loans. This one's called the 100% finance loans because it allows you to get your mortgage and then also your down payment and closing costs covered through a second loan. When I speak about this program, I talk about it as a first loan and a second loan.
And just so people know, standard, the minimum is at least 3% down, right? For anyone to get in.
For conventional loans, yes. And with FHA, it's usually the minimum is 3.5% down. So you're taking 3.5% of your purchase price, and you have to come up with that money to put down, but then you also have to come up with closing costs. Closing costs are the cost to do the loan, processing, underwriting, escrow fees, prepaids, because we prepay your taxes, insurance, all these things, so you don't have to worry about it.
Typically like 1 to 2% for closing costs?
That's generally a good rule of thumb.
So I think on TikTok what I said was like for $800,000 purchase, 3% could be up to $24,000 cash you need plus closing costs. So you could need up to $35,000 just to get into a first-time home buyer situation. And so this loan came out and I instantly was like, share us, how do we do this? You know, like for so many people who think it's impossible, there is a way, which is exciting.
Yeah, for sure. And so the thing to keep in mind with this program is you do still have to have closing cost funds. So it's not like, you're in, no problem. It's not total zero. In a perfect world, maybe, but not likely. So with this program and other FHA programs, the people who benefit the most are usually people who have a lower credit score, but they have steady income, reliable income, and that's what we use to qualify them for. So if that's you and you have limited access to funds for down payment and closing costs, this could be it. So the second mortgage can be up to 3.5%. The guidelines are similar to they're exactly the same as what you would have with an FHA loan. So they can be a little bit more strict sometimes. The quality of the property will be checked. It needs to be livable. It can't be needing repairs. This isn't, a builder loan or something. Move-in ready, good to go. What's nice about this one is you do not have to be a first-time home buyer, and you can also use it for properties that maybe have multiple units on that. However, there is a cap on the purchase price, which we know in Hawaii. This one is going to keep you in the condo to townhome territory.
Which
not
is
likely
for a first-time home buyer.
It's great. The qualifying income is also really generous. A lot of times with these programs, you have to be really low income. You don't have to be. And you do have to occupy it as your primary residence. So you're not buying an investment property with this one. This would be your home. That being said, if you're already a homeowner and you are thinking you want to rent your current property, you can buy your primary and keep your current property as an investment. That could be an option.
Quick question. So let's say we use it for another house, right? It's your second house. Do you have to live in it for a certain number of years, or can it just be the 1 year and then you rent it out? What's the rule on that?
Let's talk about that on the side.
Okay.
It's a great question.
Follow up after that.
Follow up. We'll talk about that on another one. But or in a private conversation. The other thing is that this one, again, like I said, is for folks who maybe have a lower credit score.
Sure.
So this one requires you to have a 600 credit score or higher. Another thing that's great about this is you can have a non-occupying co-borrower. What that means is that if you are buying a house, you are the occupying borrower, but if a parent or an aunt and uncle or somebody who lives elsewhere wants to help you qualify with their income and they're willing to co-sign on it, then they can also be on the loan. So that can be really great for people as well. So the property guidelines, because like I was saying, FHA does have some rules. There are certain properties that will not qualify. So that's where the relationship between us, the lender and the realtor, is extremely important, because you know what your borrower or your buyer is looking for and what their family needs. So we're going to make sure that there's a property available to match those needs that is also FHA qualified. And that depends. Again, relationship is everything. We need to know that we're communicating. You don't get your heart set on a property, then we find out that it's not eligible for an FHA loan. Actually, one thing that I did want to say going back when it comes to guidelines, because we were talking about that opportunity of renting out your present and buying a new primary, you cannot have an existing FHA loan. If you had an FHA loan on this one, you cannot get a second FHA loan.
So what'd you do, refinance the first one and then free up your FHA for the second?
Yeah, but at that point, we're kind of getting into territory where there might be a better loan program for you at that point. But just to keep in mind, if you are thinking, ooh, this would be great. If you already have an FHA loan, we're gonna need to figure out either how to get you out of that, or we're gonna find another loan program that would be a better opportunity for purchasing this new property.
Which that just goes to say, this is just a one type of program, right? And you could do a plethora of programs. And so that's where Jessica's your matchmaker. If she's really just gonna listen to your story, figure out your financial background, and determine maybe this isn't the right one. Maybe I have one in my back pocket that's a little bit better, but at least you know this one exists, right? So that's what the whole point of this is,
And we're going to talk a little bit more about that at the end, because there's some other exciting things. So there are loan limits going by island. We'll share with you guys what other states are piloting this program. There's about 12, I believe. So we'll put that up and let you guys know what other states are applicable in case you're sharing this with family and friends or people that are elsewhere. But if we're talking about Hawaii, these are the limits by island.
477 can get you a lot on the Big Island. You can get a single family home with an acre. You can get really good ones. 747 on Oahu for sure is gonna be a townhome, but at that price, you can get a townhome with a 2-car garage. It doesn't have to mean a shoebox. You know?
And if you're thinking Big Island, 610 for a 2-unit, so it's possible to have something that has 2 dwellings on it. So there's the opportunity for rental income or
and
for
multifamily.
Exactly. Second mortgage. So we're talking about your first mortgage is your principal. That's 97% of your loan amount, right? That 3.5. This is our second mortgage, our down payment and closing costs. The interest rate on this second loan is going to be 2 points higher than what interest rate we have on our first loan. So we want to make sure all of our numbers are matching up, and this is a good opportunity. Again, it's a much smaller amount.
Yeah, it's a baby loan.
It's a baby loan. So you do need to make monthly payments on this, but it will be completely paid off in 10 years. It will be fully amortized, paid off. So after 10 years, that payment is going to drop off. Can be used for down payment and closing costs. If you do end up selling your home, or you refinance into another program, or you do pay off your first mortgage, the second mortgage will also come due. So that's when you'd have to cough up the cash.
So because it's a 10-year amortized, would you say it's better for someone who wants to keep it 10 years plus? Or not necessarily?
Not necessarily, because our goal with finding any loan program is making sure that you are doing something constructive with your income. You're not paying somebody else's mortgage with your rent and throwing that money away. So if this program is going to get you into a home, maybe you're going to spend more at the beginning, maybe for the first couple years, but you've decided for yourself, for your family, this is the best opportunity. Our expenses are going to be more towards our house. We're going to shore it up in other places, whatever it might be, but we are in a home. We own a house. That's really what the strategy is getting you in your home. Next steps would be definitely scheduling a phone call to learn about what your scenario is and what is going to be appropriate for your family. Again, talking about that loan program, there was a benefit to losing our first video, wasn't there? Because yesterday there was a new down payment assistance program, a second one that was released just yesterday.
Surprise!
So now we have multiple options for folks that don't have access to down payment and closing cost funds. And this one is awesome. It's a great program. And depending on what your scenario is, this FHA loan might be the right one. or this second one might be one. And there's 2 different options with this other one for those that might be higher income earners or those that might be lower income earners. And it's really exciting that we finally have access to some of these programs. They're very common on the mainland, but they are not so common here in Hawaii. So finally having access and some help and assistance for buyers that don't
would otherwise have to wait, a long time.
Would otherwise have to wait. We want to talk with you. We want to figure out what your unique scenario is and how we can best match it with the loan program, whether it's one of these or another one. Just to be strategic, you do have to go through the pre-approval process to see where you're at.
So let's just talk about that, because I think so many people, we tell them the steps and then we get ghosted because I think they get overwhelmed. They think, oh my gosh, this is too scary. They're gonna be looking in my underwear drawer basically.
Yeah.
We're going through bank statements. But honestly, think of also Jessica like a doctor. She cannot assess the problem unless she sees the problem, if there is a problem. Or maybe she's saying, you know what, this is just a little symptom. Here's a fix right now, like a quick fix. Pay off this one thing and then you'll be good. Or maybe just boost up your credit a little bit. And she's got people for that too. So it's not to say pre-approval is this big scary thing. It literally is like an intake form. It takes 15 minutes to complete with your contact information. You say, yes, I give her permission to help me, and then she has the right to go. But if we can't get that initial application, we're at a standstill. And that's really where it hurts for us. We're like, you expressed all this interest. You told me your dreams and your desires, but you won't fill out a form.
You won't fill out a form and you're unwilling to download some bank statements and provide some documents. So I wish that they had a show on HGTV about the lending process, because it's always like, I called a realtor and then we bought a house. There's no discussion about the steps that it takes.
True.
And if you call me and you fill out the application, you send me bank statements, tax information, we talk about your income. Are you self-employed? Are you a commission worker? Are you, do you have a W-2? Whatever it is. Those simple steps show Marina that you are serious about buying a house and you're committed to this process. And it is a process. So if you know, I'm not ready, that's fine, that's totally fine. But it also doesn't hurt if you are thinking you want to buy a home in 1 year, in 2 years. You should know where you stand right now. So that we can create the roadmap to get you to where you are. And it's not complicated.
Which actually, that's my one regret of doing, like now we are at escrow for a place, and like I wish I would have gotten pre-approved 2 years ago, so I knew exactly where we were today and like how to get there. I knew a general idea of what we had to do, like 2 years of tax returns and stuff, and so I was willing to be patient, but then really just focusing on that net income, that bottom line, right? And so as an entrepreneur, you're always trying to write stuff off, and you lose focus a little bit, you get distracted, and then 2 years go by and you're like, well, crap, we didn't do what we were supposed to do.
And coming from 2 women who have been self-employed, call me, my self-employed people. I bought a place 4.5 years ago as a self-employed single mother. That's what brought me to where I am today and being in the lending industry. And there is a pathway to get there, but especially our self-employed people, we want to see what you're working with so that we can help you figure out what steps you need to take to get to that ultimate
And we
goal.
can throw in a little bit of coaching, right? Some business advice, like this is how to structure your business for this year versus that year. Maybe we strategically purchase things at different times, cutting back any fat in your business for sure, all of that stuff. We've been through it.
Super important. So that's really what it is. And, contact Marina first if you want to get excited about, the meat and potatoes of buying a house and all of that. But then just know you're going to have to do the legwork and do the financial stuff as well. So.
Yeah, that's so good. So action steps. First thing is you got to reach out to Jessica and myself. So I'm going to make sure on YouTube, in the link below, we're going to have a contact form for Jessica. Reach out, have the initial consultation. And that's just literally a conversation like this to say like, hey, I'm interested. Can you please tell me more? What's the first steps? Or like walk me through pre-approval. And I know for so many parents, especially hardworking parents who have multiple jobs, it can be really hard to find a time 9 to 5. That's okay. We work evenings.
Yeah, absolutely.
We really do what it takes. And sometimes that means an 8 p.m. call after the kiddos go to bed. And so it really is just, we're here to help. We have passion for this, helping first-time homeowners. And a lot of locals, like it feels defeating to think that home prices keep going up and up and up. But the biggest regret people have is not starting sooner. So if you can start today versus waiting 2 years, why wouldn't you at least get educated so you know kind of first steps? And then of course you'll go through their file, make sure everything looks good. And if not, give us some advice for tweaks. On the back end, we'll be communicating just to make sure that we're on the same page. I'll set you guys up on a home search based on what our initial ballpark numbers look like, so you guys get an idea of if it's realistic for you in that price range. And really, we're just gonna be focusing on that monthly payment. Is that a number we feel 100% confident in? Knowing our income might fluctuate. Are we good with that mortgage? Which if you're paying rent already, like $2,500 plus, we've got wiggle room. So I think that's a big part, but every scenario is so different.
So different. And what I would say is if you really are serious and you want to do this, block an hour out for yourself, get a cup of tea or a glass of wine or whatever your poison, sit down in front of your computer, fill out the application, start collecting those first documents, last 2 years of tax returns, 30 days of pay stubs. We need a picture of your ID. ID. We need to know who you are.
And if you don't have it all at once, that's okay too.
That's fine too. We can just get
started and you can do it later.
Yeah.
So I did that. We didn't have everything all at once. I probably had like 50% of my paperwork. And then throughout the next 2 weeks, I was like, well, let me find this thing. Let me dig up this other thing. And we work together. It's just communication. So yeah, I think that's the big one. Do we want to go through some of the FAQs people had on the webinar?
Yeah. So on the FAQ, someone asked about this particular loan program in buying on the Big Island and lava zones. This particular FHA program is not eligible in lava zones 1 and 2. However, Academy Mortgage is one of, I think, 2 companies in the entire state that can lend on lava zones 1 and 2 and all the rest, but it would be a different loan program. So we need to talk about that.
Yep, which again, not one size fits all. This is really like find your situation, what you're looking for, and then we provide you options 1, 2, 3. And then the other one was Hawaiian homesteads.
Yep, Hawaiian homeland. So this one unfortunately will not work for Hawaiian homeland, but again, we have programs that will.
Would an FHA, a regular one, work? A 3.5% down?
I don't remember, if I'm being completely honest.
Yeah. That would be a good follow-up to this. So if you are looking for Hawaiian homelands and you know you're on the list, you've already done the blood test, like still reach out to Jessica and myself and we can set you up with what that action plan looks like. Because if something's on market and you can qualify for that loan, you don't have to wait for that magical call to say you've been picked. You can buy a house. It's a leasehold, right? But there are options.
Yep, absolutely.
We had a Maui situation, right? So she wanted to buy her mom's house. Is that what it was?
Yeah, her auntie's house, but this one's not going to work for that one.
Yes. But again, that's why they have to connect. You have to reach out to us.
Yeah.
So we can at least be like, what's the game plan if we're trying to inherit something or we're trying to do other things?
I think that's one of the like really strong takeaway from our first recording that we did, and that is really important, is I've been contacted by 3 different people who have done, well, I've been contacted by more, but 3 different people that went through the process afterwards of doing the application and for this, and and for one of the scenarios, this isn't appropriate at all, but we've identified one that is.
Yep, see?
And then we move on from there.
We had 45 people sign up for our webinar, which was astounding. We were so impressed, but it tells us that you guys want to know more information. So that's the point of this video, is just to give you the 101, and then next steps is to reach out so we can really identify for your specific situation. Okay, anything else we want to touch on? I feel like that was good.
That was great. Yeah. I think we should do one another time about credit scores.
Oh yeah.
Yeah, credit.
Sexy credit scores.
Hot.
Okay, so with that, that's the end of our video today. I hope you guys learned something new. I for sure did, and I'm so excited that this is new to Hawaii, like literally not even a month old. So the fact that you guys are getting the scoops now is great. Like we said, we don't know if other companies are offering this. I've asked a couple of people and they don't offer it. Their other company does not. So it's great that Academy Mortgage does have it, and a variety of other programs available.
This FHA one is specific to Academy, so we are the only one with this one. The other ones, maybe some.
Yeah, totally. And then VA loans too. Jessica crushes it on VA loans. If you guys are military or have that access, is great. But we're here to help. This is our job, our passion. We really love helping you guys get from point A to B and even to Z to closing and keys. So we're here to help. Be sure to hit that like and subscribe if you guys want to see more, and we'll see you soon. See ya.